Hello everyone, I am Professor Shamal Patil. In today's class, we are going to learn about the parties interested in financial statement analysis and the types of financial statement analysis. Let's begin with the first, parties interested in financial statement analysis. The first party is management. Management of the organization wants to do the financial statement analysis to know the overall efficiency level of the business, and the information provided by the financial statement analysis will be used in decision making process and controlling the activities of a business organization, and the performance evaluation can be done with the help of that information. The next party is employees. Employees does the financial statement analysis because they take the decision based on the job with good and fair incentives and better working conditions, and this information they will get to know with the help of financial statement analysis. The next party is shareholders or the investors or owners of the firm. Owners of the firm does the financial statement analysis to assess what is the profitability and growth prospectus of the business enterprise, and with the help of this information they take the decision whether to continue the investment in the same company or to withdraw the investment. The next party is potential investors or new investors. They are interested in financial statement analysis because they can determine whether the firm is profitable enough and safe for their investments, and with the help of this information they take the decision whether to invest in the company or to search for another company. The next one is creditors. Creditors does the financial statement analysis to assess the firm's short-term solvency position before providing the credit facility. Short-term solvency in the sense firm's ability to repay the short-term obligations or short-term liabilities. If the firm is sound enough to repay the short-term liabilities out of their short-term assets, in such case, creditors take the decision to provide credit facilities to the company. And if the firm is not sound enough to repay the short-term obligations, then they cancel providing the credit facilities to that firm. The next one is bankers or the financial institutions. Financial institutions and bankers does the financial statement analysis to assess the short-term and long-term solvency of the enterprise to ensure payments of loans and debts and the repayment of the principal amount. That is, bankers and financial institutions does the financial statement analysis to find out solvency position of the firm, that is firm's ability to repay the long term loans, and once they get the required information relating to this they take the decision whether to assist the firm in finance or no. So these are the various parties who will be interested in financial statement analysis, and based on the information they needed they can apply the tools as required and they can do the financial statement analysis. Now let us understand what are the types of financial statement analysis. Financial statement analysis can be done in two ways. First one is financial statement analysis or the classification of financial statement analysis on the basis of materials used. In that we have external analysis and internal analysis. And the next type is on the basis of methods of operations or methods of operandi. In that we have horizontal analysis and vertical analysis. Now let us learn these types one by one in detail. The first one is classification on the basis of material used. In that, first one is external analysis. Now what do you mean by this external analysis? analysis made by external parties like investors, creditors, bankers, credit agencies, etc., on the basis of information published in financial statements is called as external analysis. We cannot give the guarantee of whether the analysis done by using the external parties is relevant or authentic, because the source of information for them is financial statement published by the company. So whatever information given in the financial statements, on the basis of that they can do the financial statement analysis, and such analysis is called as external analysis of financial statement. The second one, internal analysis. The analysis made by internal parties who have access to the books of accounts and other information relating to a firm is called as internal analysis. Here, the analysis can be done by the employees of an organization who can have the access on the books of accounts, and therefore whatever analysis done by the internal parties will be authentic and relevant, because they can access all the information, they can access the books of accounts and other financial information, and based on that they does the analysis of financial statements. So we can give the surety about the relevancy and accuracy of the financial information provided by the internal parties or internal analysis. The next one is classification on the basis of modes of operandi, that is methods of operation. The first one is horizontal analysis. Analysis of financial statements for a number of years is known as horizontal analysis. That is, suppose if the firm wanted to evaluate their performance compared to the previous years, in such cases they can does the horizontal financial statement analysis, because in this statement what we do, we take the financial statements of the number of years and we do the financial analysis of those statements, and such analysis is called as a horizontal analysis. Here we can take the example of comparative financial statement. So in horizontal we can take the comparative financial statement analysis, and we can does the analysis of previous years, and we can find out what is the trend in the profitability position, financial position, or the sales of the company or the sales revenue of the company. So in this way, depends upon the information needed by the management can select any one of the above methods. The next one is vertical analysis. Analysis of data for one single year, and it is also called as static analysis. That is, when the analysis done only for one particular financial year, such analysis is called as a vertical analysis. And here we can take the example of common size analysis. With the help of common size analysis, we can do the vertical analysis of financial statement, where the proportion of each items will be compared, and what is their proportion in the financial statement will be calculated in terms of amount as well as in terms of percentage. For example, suppose if you are doing the common size analysis of income statement, then the items of the income statement will be compared with the sales, and considering sales amount, their proportion will be calculated. And when it comes to balance sheet, each items of the balance sheet will be calculated in proportion to the total assets or total liabilities of the firm. So in this way, analysis will be done in vertical analysis. So these are the various types of financial statement analysis. In the next class, we will discuss about the steps in financial statement analysis. I hope you are clear with the types of financial statement analysis. The types of financial statement analysis are very easy to understand. There are two types. First one is classification on the basis of material used. What type of material we are using, based on that the analysis will be done, and such analysis is called as classification on the basis of material used. First one is external analysis, that is analysis made by external parties based on the information published in financial statements is called as external analysis, whereas internal analysis means analysis made by internal parties based on information available in the organization. Such analysis is called as internal analysis. And the next classification is on the basis of modes of operandi or methods of operation. In that, first one is horizontal analysis, that is analysis of financial statement for a number of years is known as horizontal analysis, whereas analysis of data for one single year is known as vertical analysis. And vertical analysis is also called as static analysis. So here I conclude my today's class. In the next class we'll learn about the steps in financial statement analysis. Thank you.